And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, June the 28th. My name's John. Thanks for trusting me with your time this morning. If you're already in the markets, hopefully you've got things going your way. Kind of a quiet morning, I think, a little bit so far in most of these markets. As always, our job as traders is to manage risk. Risk management is job number one, always seeking accurate context and trying to remain patient. As far as economic numbers this morning, 7:30, the international trade numbers came out, as well as the retail and wholesale inventories already out. 8 o'clock, right here during the market forecast, we're going to have the Case-Shiller Home Price Index come out. And then the most important economic number of this morning is going to be, of course, the 9 o'clock a.m. Central Consumer Confidence number. So we'll be certainly keeping our eyes peeled on that. I think the major focus as far as economic numbers is on the GDP number tomorrow. So as always, it's good to see everybody. Welcome. As far as anything else that's going on, the U.S. stocks are set to open higher after major banks pass the stress test that, as the Fed says, they are easily strong enough to survive an economic turndown. 4 of the major banks raised their dividends already. Crude prices continue higher on, I guess, good news, right, of no new COVID infections in Beijing and Shanghai, raising the possibility of increased demand as possible normalcy returns in China, in those 2 big cities. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling and love are always welcome here on the forecast. Just make sure you subscribe to our YouTube channel so you get notified when we do go live, like today at 11:30. We have the Coach's Playbook. We'll be going live on Facebook again, and then of course for the market recap today. Now, speaking of the forecast and the market recap, as of Thursday, I'm going to be out of the office. I'm going to be taking a little bit of time off the end of this week and next week. And I see my good friend JD, John Doherty, I think, is here. I see Jack Doherty. I see his dad. Hello, Jack. I don't know if John's here, but he's going to be covering for me. He is better looking, smarter, and younger than I am. So I know you'll be in great hands. As always, checking the VIX this morning, it's down slightly at 26.94. The dollar index up slightly at 104.20. And the yield on the 10-year creeping back to the upside here at 3.24%. Good morning to everybody. Tachyon's first one in the room. You win the prize this morning, Tachyon. Rob T, good morning. Theo, good morning. Scott Saw. And he conquered. Shaw, good morning. Frederico chilling with Dylan, Charles March, Will Doherty. James Swan, good afternoon to you. Having a hard time lately, but always learning, and that's the most important part. That's always difficult. And whenever we seem to get the right answers, the market seems to change the questions. It's always a challenge, even after 30 years. Good morning, my brother Rick. Love you. I got a call this morning, Rick. Mom is watching, so everybody hide the beer, or at least the wine. Glitter Sandwich, good morning. Vince, good morning to you, sir. Terry King, ZK, Sarah Hall, good morning. Prayers and love to you as well. Rusty Golfer, my spirit animal. Chris Johnson, nobody, hello. I Print Money, love that name. Dimitar, good morning to you. Dr. VJ, Jack, I got your son back with me today. I'm pretty sure he's going to be around. And James, good morning. Bill, my goodness. James, Nicholas, good morning. Patrick, Trading Research, and it's Joe. Hello, Joe. You're back to Ann today, I see. Anne Marie Bandy, it's so good to see you. Glad you're feeling well. And yeah, I'm going to take a little bit of vacation time. I'm going to go down to see some friends down in Table Rock Lake, Missouri. Gonna get some lake time in. Albert, good morning. Eric, Dan, Dr. VJ, Brian Hardwork, Hogan, Kevin, Jan R. Good morning. And Alessio, greetings from Italy. Well, greetings from Italy. Welcome. Glad you're here. Hope you enjoy the market forecast, and I hope it's helpful in your trading day. Of course, that's goal number one. Lubos, good to see you this morning. Today is Tuesday. It is Maycoke Money Day. Virtual Mark from the UK. We got another guy from the UK here this morning. Drum Lab, good to see you. I just popped in the link to get the link for Maycoke Money today. All are welcome, of course. Would love to see some folks that want to kind of talk about their trading. Anne Marie, always a pleasure to have you there. I look forward to having you speak today if you would like to. Zoraine, good morning. And I do apologize for the group coaching yesterday. I must have done something. I deleted it. It's a new link. I'll put that link in the forecast tomorrow morning for group coaching. So we were unable to finish or to have it yesterday. We have some really good subjects. Ute is asking about some of the things that I've mentioned in the past about how trading successfully isn't just about market knowledge or self-knowledge. It's a combination of both, and mix those up with a strategy, and you can, and I believe we all can, be profitable in this, be able to make money, be able to maintain that account and build it over a long period of time is really the goal, and the goal that I've strived for with most of the people that I work with. Alfred, good morning. Chris. Artem, Ukraine is here. Welcome, Artem. Blessings and peace to you. I hope things are going well for you in trading and in everything. It's amazing that you're even here. We are all continuing to pray for peace. So what do we got going on here? We're going to start with the E-mini S&Ps. The group coaching videos are not available anywhere. You can send me an email at jhoagland@topstep.com, and I can send you copies. Oh, Artem, all our hearts are with you and all of Ukraine. I don't even know what to say about it. Every time I start thinking about it or talking about it, I start to get emotional. But know that we are all praying for peace for you and for all of Ukraine. All right, starting with the S&Ps here. We've got the S&Ps still holding a slight gain in the overnight. We'll take a look and see what we've got in these charts right now. All right, so yesterday, the S&Ps, I think, were probably the most interesting market because there were a lot of nuances that were in play yesterday. Good morning, AZDC. Excuse me. So here's the daily in the S&Ps. So last week we had the first up week in 3 down weeks and 1 up week last week. My question is always, what direction is the market attempting to go, if anywhere, and how is it doing in its quest to move in that direction? Last week, late last week, and early last week, I think we should say, we were looking at the monthly and the weekly and the daily, and all of the time frame charts were saying, this thing's going lower, which gives me a little bit of a caveat to that. And we did end up pulling back off those lows last week. So when everybody and everything is saying that the market is going lower, as I've mentioned, I keep hearing my dear old dad say, well, the market always looks the worst at the bottom, and it always looks the best at the top. So we've got our pullback. Friday we had a big up day that did not bring a whole bunch of new business. Okay, that was a short covering rally. Yesterday we lost open interest of 17,000 on an attempted continuation. on an attempted continuation to the upside that was supported by the late spike we put in at the end of the day on Friday. We did end up bringing value higher and having an overlapping to higher overall range, but how good did it do? Today we have a little bit of new information in the banking sector, getting a seal of health from the Fed. And a couple of, and four of the banks have already raised their dividends. So that's the good news for today. But when we get down to it, what is the market doing? It is ranging again in short time frame. Here's the late spike we had on Friday. We opened above it. We did not drive directly away from it. We dabbled with value from Friday yesterday. We actually closed inside of value, inside of Friday's area of value, but we did put an overlapping to higher range and an overlapping to higher value area. So the market is still trying to push to the upside. I would have been much more pleased had we had a big increase in open interest in the S&Ps yesterday instead of a drop in open interest. The volume in New York was almost half what it was on Friday. When we're looking for a market to continue in a direction, we want to see volume continuing to increase or at least maintain. We want to see open interest continuing to increase. So what this market is telling me this morning in context, in my little feeble mind, is this market is struggling to continue this move to the upside. Without new business, the market is likely to just waffle. We know we have information coming out tomorrow in the GDP, and we left a poor low yesterday on a daily chart. This downside auction yesterday did not finish. There's no excess. It didn't get too cheap for sellers to back off and buyers to come back in. It looks like it did. It's tweezer bars down here. The market looked down there a couple of times and did not continue. However, that weak low here, that even low, some people would call it a double bottom, can be a warning sign that perhaps we've gotten a little bit too long in the tooth up here. So what are we looking at today? Well, we know we're awaiting the GDP, so it kind of makes sense that we're a little bit range bound here. Overnight inventory, we're a little bit to the long side, not tremendously. The market is going to really kind of, I think, early in the session today, accept value from yesterday or reject value from yesterday. I don't think there's much of a probability of us opening with a gap. Now that I've said that, as usual, the market likes to make a liar out of me. If that happens, that may offer an earlier opportunity. If we open in range or at least in value, then I'll try and stay patient and wait for better trade locations as the day goes on. I'm going to take a look at the TPO chart here. This is that poor low we were talking about. Yesterday, the first 30 minutes, a period, engulfed the entire range of the day until right at the end. After 2 o'clock, we got a little bit of a range extension. That range extension was attempted to get extended down below. This weak low down here indicates an unfinished downside auction or the fact that the market just got too short down there in short time frame yesterday. What does all this mean? Well, when I take a look at the bigger context, the numbers, the open interest, the volume, the way the market has been holding here, to me it says that the market is struggling to continue to the upside. It's waiting for new business, and that new business may come in the form of the GDP tomorrow. So the late spike that we had on Friday did bring higher value and range. Didn't do that good of a job of it, though, did it? We lost open interest. That's the thing that scares me for longs. The thing that scares me for shorts is if we are going to continue this market to the upside, are we going to just go back into that pattern where the market gets the short time frame traders too short and then just grinds them to a pulp as we continue to push to the upside? I don't see that happening today with GDP tomorrow. I see more of a rangy kind of day like we had yesterday. That first half hour was so solid. If you sold up near the high or bought down near the low of it, you could have had a really good day yesterday. It's one of those cash register days. So we're going to be opening right at last week's high. Don't forget last week's weekly kickoff level was 39.10. We're still contending with that. It still seems to be somewhat magnetic to price. And that magnet to price at that level, what is going on here? And that magnet to that level of price might be the fact that we're waiting for new information. So if we're inside range today, try and stay patient. You might want to think about waiting for the opening, for the initial balance to establish before looking for opportunities on those extremes. Here's crude oil. Crude oil back to the upside. We were kind of looking at a potential head and shoulders here. We may break that today. We've got last week's high in play. We added 2,300 in open interest yesterday. The volume wasn't tremendous, but at least it tried to maintain. Remember, when we're looking at a market that's directional, we want to see a higher volume and an increase in open interest each day as price continues in that. If we see that, that's more likely to continue. So looking at the open interest, adding 2,300 yesterday and closing above that weekly kickoff high of 109.50, those are all good nuances for continuation to the upside. As far as technical and auction theory says, right? So here's the 30-minute chart. We were kind of looking at a potential bull flag or bear flag here. We're really holding nicely up against this trend line here, or this channel line, or as we like to call it, the Daniel line. And we've opened now with a gap. Don't see that there's a whole lot of confidence in this here so far. The first minute has taken a look above. We got the head fake above. Are we going to get the head fake below? I'm really not in a hurry to try and get into anything unless I can get good trade level, unless I can get good trade locations. Where are the good trade locations? Well, I mean, this last week's high can be helpful and useful, but it's been run through so many times. I don't see that it's going to be all that tremendous. We've got our whole moving averages and short time frame here kind of mixed, kind of braided. We've got breakouts. We've got over, under, over, under, over, under. The market is continuing to try and push to the upside. I wish I had a more clear picture for us. The overall context, I think, is this market is trying to continue now to the upside above this weekly kickoff number, 109.50, and until that proves to be wrong, we do have some pretty substantial overnight inventory, but we have opened now with a gap. Gap rules. If we can't close the gap relatively early, we try and go in the direction of the gap. So if we get a decent pullback here, it's going to be hard to find areas to limit your risk. Maybe the pullback to the hot range high from yesterday or value high yesterday could be a decent level for us. We do have a lot of overnight longs in this market. Those overnight longs, if they have enough position, they can move price all the way back down to settlement and all the way back down to this weekly kickoff high, which was resistant, then becomes support and move back to it, maybe comes back down to a support level. The Nasdaq, very similar to the S&Ps, yet a little bit different as usual. Yesterday, we had a little bit higher volume in the Nasdaq futures. We added 3,200 in open interest on this push to the upside yesterday. So the auction in the Nasdaq appears to be a little bit healthier, higher volume, and an increase in open interest on an overlapping to higher range. Last week's high now showing some signs of resistance where it's a little bit more magnetic than the S&Ps. Here's the 30-minute chart. Friday, right up there's when we put in last week's high. Yesterday we opened above it, broke, it became resistant again. Last night we got up to it, it became resistant again, and we are overlapping to higher range, overlapping to higher value, but we're opening inside value with a high probability here in the Nasdaq. That's a little bit different than the S&Ps. Thinking about the same thing, how is the market doing in its push to the upside here in the Nasdaq? It appears to be doing a little bit better than the S&Ps. It appears to be, because we had a little higher volume in the futures, and we added open interest on an overlapping to higher day and an overlapping to higher value. Is it really doing a good job? Where's the momentum? Why are we so resistant at last week's high? Waiting for new information. Waiting for information. Yeah, there's so much going on. The numbers today, as Anne-Marie's pointing out, were largely not good. The GDP catalyst to push us out of this range. The thought of everything swirling geopolitical situation, the G7 new helicopter money might still range. And then, also this week, it's the end of the quarter. So we're going to have some possible window dressing for the end of the quarter, Anne-Marie. There's so much to look at and so much to think about. It's difficult to make any kind of decisions. So what I'm going to default to is what I'm seeing in the profile and in the auction. There are, we've been dealing with so many uncertainties in the world and in the markets. It almost seems like we should know better, but it's always something else. It's always something new. All right, so let's take a look at gold briefly here, and we'll move on. Balance. Here's the daily. Short time frame control. Moving averages. Look at the daily. Braided. This is the hulls. The hull 9 and 13. On the daily chart, they're braided. They're sideways. I think this is the 20-session exponential moving average. It's right in range too. When I see all these moving averages bunched up like this, it's a hands-off type of situation for me. I don't want to be too aggressive or too active in this market because, again, it's telling us it's not going anywhere. Okay. We get the dollar index grinding higher. A little bit higher for us today. Here's the 30-minute chart. Last week's low, last week's high. The medium time frame extremes. We've been in this for almost 2 weeks, or about 2 weeks. We've been in this range. So my real focus is going to be where I'm going to be more aggressive is at these extremes. We had 18, which was a previous weekly kickoff level, the low from last week. 814 is now the new weekly kickoff. We've got last week's high and last week's kickoff. This market is so queued up to just stay here in range until it doesn't. When it does break out of this range, I think that's going to be one of our bigger opportunities for the quarter, because it's going to be building energy and it's going to be really just kind of looking for a new area with which to facilitate trade. Let's take a look at this. So we were looking at this last week. We saw that there was some need for some repair in this composite profile. The more even this bell curve gets, though, I think the closer we're going to get to an eventual breakout outside of the current area of balance. We've been working pretty hard at filling in the volume between these 2 points of these 2 high volume nodes. And when this kind of longer term composite profile evens out, then I think we're going to be a lot closer to looking for a move away from this area. This market has used up its ability to facilitate trade here. I mean, take a look at the volume. The volume is just languishing. Open interest. We did add 1,100 yesterday in open interest. What would we say that is? Shorts. Shorts getting too short near the low. That's what short time frame markets do. You get the short time frame laggard shorts down here, and they're the first ones that are going to turn this market and end up being the laggard buyers up here. And that's what we're doing here, is we're trying to work against our own time frame. When we know that when we can sense or we can feel or we can see that our short time frame direct competitors, and I don't really call them direct competitors, just our time frame traders, are the wrong way, then it's time to take the other way. As dear old dad said, it always looks the best at the top and worst at the bottom. Let's take a look now into the euro. We getting a nice spike in the dollar index. That's taking the euro down. Tested last week's high last week. Here, let's start with the daily, and that's always the best idea here. Alrighty. So we've been wrestling up against this high here for quite some time. And we tested into it again last night. Let me get my charts here. All right. Volume has just kind of remained average yesterday and the day before. We did have an increase in open interest on this attempted push above last week's high. Yesterday we added 4,000 in open interest. So we have seen a little bit of an increase in open interest over time here in the euro. I think there's some possible better opportunities coming down the pipe here. When is a good question. Just keep testing this upper extreme here. We've got higher lows. We've got even highs. At some point, we're going to break out of this little triangle we've got going, and that's going to be a go-with situation. But until then, we are looking for opportunities to fade the extremes in this situation. So, here's the 30. We did have no real overnight inventory, but as the dollar has popped to the upside here, we're seeing some continuation to the downside. If we've missed this, that's okay. There's going to be more opportunity, but inside of this area of balance, I'm looking for opportunities to use short time frame levels to my advantage. How do I do that? I use them to limit risk. There's a lot of things to look at down here. We've got the settlement from last Thursday. We've got value low from the same day. We've got swing low here. We've got swing low here. We've got last week's low here. I don't want to fight this one time framing activity. This looks like it's too emotional, and if you try and pick a bottom in this, you end up getting chopped up. So this is if you're not in this, you may just want to wait and see if there's some sort of structure that gets created along these lows before looking for a move in the opposite direction. I don't think that I would necessarily be wanting to sell into this, and I certainly don't want to buy into it. So I'm going to be a little bit hands off until price gets to a level that we've seen rejection in recent history. That level is going to definitely probably be down here and up against last week's low. I don't know what got into this. It was a really quiet market when I sat down, started looking at things, and it's just kind of fallen apart. The dollar index, I think, has driven us to the upside. All right. 10-year. Yesterday, I said I really had no interest in trading this market. It appears as though we may be coming into a bull flag. Here's the daily chart. Whoops. Here's the daily chart. So we've come off these lows. We know that rates are going higher. I don't know. I don't see any reason for any big rally in the 10-year here. And again, I kind of took a hands-off approach to it yesterday. I said nobody really cares, nobody's interested here. We lost 200 in open interest. No change in open interest. The change in open interest yesterday was completely inert. And we continue to see volume languishing in smaller ranges to the downside. So this actually could be setting up a bull flag. We're on the lower end of it, so we're not. I don't think we're near any possible breakouts above this today unless there's some sort of drastic change. And there's a whole lot of information and unfinished weaknesses in structure in this whole area. We've got this gap here. We have this gap here that remains slightly unfinished. There's just a lot of unfinished business here. So I'm going to be probably being patient, kind of trading hands off unless we get a breakout above this bull flag, or we get an opportunity near our recent lows that have shown signs of rejection after rejecting from below and rejecting from above. This is where the fish are, but I don't know if we're going to get the chance. And natural gas. All right. So we lost 14,000 in open interest yesterday. Short covering. Last week's low proved to be too cheap. If we took that opportunity, that was a pretty decent opportunity. We seem to be falling into range here. So we're going to be looking at this market like, well, what direction is the market attempting to go? Volume was really strong for the last 3 sessions, but it didn't really go anywhere. Open interest we lost. It seems like this market is falling into range. Here's the 30. Bear flag perhaps forming? Nah, I don't know about that. Here's our short covering rally yesterday. Settle up here. Overnight inventory to the long side already being reconciled after the open. You see the open up here. We've seen the market coming back to range. Closing the gap back to settlement might be an opportunity. There may be some fish here. You've got value high. You got yesterday's session high, value high. You got settlement, and you've got the point of control from yesterday, all tightly wrapped in this little area. This is a target-rich area. Whether we bounce off it and head higher or reaccept value and move to the low end of value is in question, of course. Value area special situation. We opened outside of range and value. If we reaccept inside value, the rule states reacceptance inside of previous day's value, there's a high probability that at some point during the session, price could rotate all the way back to the low of value. At some point during that session. All right. So we had a little complaint in the chat room. I don't know this person, and I'm sure that if there's some sort of disagreement, this is not the place to discuss it. That's why we have our support team, and that's why we have our compliance and risk team. So sorry you had a hard time, and I assure you we are not a scam, and we are very proud of what we've done with and for the trading community. So looking forward to a good trading day today. Looking forward to make Hogue money. I've gone a little bit long as far as my yakking during the forecast is concerned. So let's take our deep breath. Stay humble, grateful, and creative in your trading today. I look forward to seeing you in Make Hogue Money. You'll be there in just a couple of minutes. Be kind to yourself. Be kind to others. Keep praying for world peace. And, we'll look forward to seeing your success. Trade well today if I don't see you. If I do, I'm looking forward to it. We got Make Hogue Money in just a couple of minutes. Trade well, everyone.